The S&P 500, the Nasdaq 100, we have quite a bit to be discussing when it comes to exactly where we're at and exactly how we're moving. I wanted to come into today flaming, excited, cowboy hat, champion belt, but I want to take this time to say thank you to you guys before we jump into this. Thank you for supporting the channel. Thank you for being along for the ride. Thank you for keeping me honest at all points in time. I appreciate you. Now, when we get into what's happening on the day, this is an absolute beauty. And I kind of think there's a lot here on the chart, so let's just start deleting some stuff when we really get in here. And this kind of just shows of like how far we've come here. This is the Nasdaq, and dear God, it's beautiful, right? To say the least. You know, we had the ascending triangle coming out from last week. We broke above. You know, the rest is history. We've hit every target. We've been talking about every single one of these targets, and we'll get into a little bit more of that in a second. We're also getting above some of these overall major levels we had last April. Over a year ago, we were at new 52-week highs and counting. You know, really pushing over these levels. Now, today we did have some data, PCE, and I'm not going to lie to you, PCE data was not awesome. We had Fed members come out and say it's likely we need to tighten a little bit more. But the market doesn't really seem to care at all, right? We've seen this trend from tech, and we're seeing money flow and flow and flow and flow and flow. And I just had this come across my desk. You know, this is the final heat map for the day. Right here. This is it. Beautiful. It's one of the few days that I've seen the entire market really look green except like healthcare. You know, banks are even green. So it begs the question, are we back? And that's the question we're going to tackle today. Now, before we get to that content, before we jump into those charts, those stocks, and what's coming next week, I got to ask you to consider doing two things: liking and subscribing. Also, the newsletter link is down below. This is from the previous week, the S&P and what happened with the Nasdaq. We told you the bull flag. We told you every level, the push, 14.37. What about this one? 13.52, right? The bounce, where to expect it, everything here. What happened here on the week? Where did we bounce? Where did we bounce, ladies and gentlemen? Where did we bounce? Going back to Wednesday, look at that dip. 13.57 roughly. Almost to the tick. Well, absolutely free. This is all free. The newsletter down below, you can see there's no advertisements. We're not selling. This is free content. It comes out of our pocket. We pay for it to get you the best content that there is. Okay. And if you're interested, you want to take a step out. You want to eat with the big dogs, roof. You want to be with us every day, every waking moment. Okay. Discord may be for you. Just to let you know, full access is about to start jumping up. Basic access will be closed, and it will rise to around $50 when it reopens, just so you know. They're banging on the doors. That's the IRS, because we absolutely robbed them this week. They're literally banging at my door right now, giving you a visual. This is today. This is just today. These are just the boys in here absolutely murdering it from every quarter of the book. Left, right, dodge, dipping, everything, right? This is everything. Absolutely. This is just today. Just today, people, just to absolutely murdering it. For myself, I pulled in around 4,500 on the day. Again, another solid day. I can't complain. Guy, hey, IRS, stop knocking. You're not coming in. It's my money. Okay, so we killed it. Do what you got to do if you're interested. Let's get into this coming week. It's going to be a shorter one. We don't trade on Monday because Memorial Day. So a few things we do need to know. We have blown past all of our targets, 13.75 and then 14.2 on Nasdaq, as you can see here, absolutely ripping. But where things start to look interesting, and I think has to be our next level of focus, is right here. I think this is our focus now. We had this ascending triangle forming out based on ES, and now you're just pushing up, and we're like making higher lows, but it's just getting a little bit ugly. But we're breaking out now. Again, we kind of had the breakout already, but you're still holding up here. People were saying, well, ES came back down. It did. But we are seeing the facts line up more of ES is lagging behind. It's probably going to want to play catch up pretty soon, especially with the Dow. The debt ceiling, I think there's just this understanding that it's going to get resolved. Maybe that's what the market's pricing in. But all in all, we look really good. If ES starts to rip to its target, I mean, honestly, ES to even play catch up has to get all the way back to like 4,500. So it has a lot of room to go. But even if it gets to our first target of 4,300, I believe we could continue to see this rally. And again, let's just talk about a few names that haven't even started to see the love, right? The biggest names that are seeing all the love, obviously, NVIDIA. Fantastic. I still love you, NVIDIA. Stay beautiful. AMD, one of the big names we've been mentioning all over Twitter. AVGO, mentioned this here quite a bit. LRCX, again, another big name. You know, you're seeing a lot of these names across the board. QCOM, remember the stock play we mentioned here, absolutely ripped today. Been buying this one for the long term. Easy money play there as well. Now, all these tech names really killing it. Microsoft, Amazon, mentioned this yesterday, really big bounce. I literally said yesterday, 114, the next target's 120, 122. You went up to 121.5 today. Congrats. So you're getting that move. But we look at names like Apple, right? Like Apple's had a great run, but we've kind of flatlined for the past, 2-3 weeks. Okay? I could go down a list of some of these names that aren't doing too much. Costco, doing nothing, flatlining. Target, right? Consumer staples, right? Flatlining, doing not too much, right? Am I saying they have to run, right? Let's look at some just random names. PayPal, sitting at lows. Square, sitting near lows. Some of the cloud names still pushing up. We like those. We've been saying that. But I just want to say there's still a large segment of the market that hasn't even run. And I see your questions. I see them. But I want to say one thing to your question. What if we're asking the wrong things? What if we're saying, and I see everyone like, well, guys, this area of the market isn't, pushing up. This means we have to be bearish. I'm just saying, riddle me this. What happens when the weak areas of the market start to get love and they start to bounce? What happens then? Is ES going to absolutely rip? I mean, if 75% of stocks aren't moving as much as semiconductors and cloud names, I'm just saying, what happens when those 75% get love? Could be diabolical. It could be insane. And I think these are questions we have to think about. I'm just saying as well, people want to say we're still in a downtrend. I'm just saying, guys, I was Bear of the Bear, right? That was my name for a while. Big Bear Tyler. When we were trading in this range, I was all for it. But we've been out of this range for a while, and we're pushing up with vengeance. The move that we're seeing here since January till now, it's almost as aggressive as some of the moves that we saw back in 2021. In some cases, it is more aggressive. Way more aggressive than what we had from January into May of 2021. Far more aggressive. So the move we're seeing is very impressive on tech. Okay. Now, over the weekend, a few things we need to be looking out for going into this coming week. I'm going to tell you right now, any Fed speakers next week, I'm very interested to see how the market reacts to them talking. I don't think we're going to get shot down, but the markets are pricing in a rate hike. And again, I was wrong when I said that we were going to get a pause. Well, so far, I guess technically we're not wrong yet because there hasn't been an announcement or we haven't had a rate hike. But it's looking like they're going to do another hike based on data. However, based on the markets, you continue to move up. Okay? And what do we say here? Do we want to be the first person to short? Do we want to predict when the top is? Is that our goal as a trader? To predict what's going to happen next? Or if you're a day trader, if you're a scalper, short-term trader, what is your primary focus here? The goal is simple. The goal is to react to the market and take what it gives us. Over the past few weeks, I can go on a long list of reading comments and looking at other content creators or looking at other people in the financial space and people saying the Fed's bearish, the debt ceiling's going to crash and crumble. And if I listen to those, I wouldn't have made any money, right? I show you the wins, show you losses here. So I just want to say that. Be responsible and take accountability for your positions, for how you're trading. But also, too, though, keep an open mind, okay? Because at the end of the day, you're in charge of what happens to your money. No one cares. got bet. Sorry, but no one cares what happens to your money at the end of the day. So just understand that. Okay. Very important there. Also, too, though, ES. I think all eyes have to be on ES and S&P futures into next week. If you put, I think you're going to get the push into 42.55 next week on ES futures and into that $4,300 range. Okay. I will say this right now. Get on the newsletter. The link, I already did the advertisement on that, but I'm going to tell you right now, we're going to have all that information and more for you this weekend on Sunday. So make sure you're tapped in and you're tuned in because we have a lot of information coming for you as well there. Now, as far as stocks I'm liking, stocks I'm loving, I'm going to go over VIX in a second, but I just want to say this too. I've gone over the long list of stocks I love, stocks on the list, stocks I'm watching for. I can't do too much of those. I can't give you too many more tips there just because we're running up so much. I still do believe semiconductors have more room. I know, crazy. AVGO, we have some more earnings coming up this week. Those are going to be important. But I'm going to tell you right now, as long as semiconductors continue to give the outlook that they're giving in this market, I'm going to tell you right now, you will continue to move up. You will continue to outperform. It's going to keep happening. As long as these earnings continue to come out the same, increasing revenue, showing growth in the midst of a recession, in the midst of an economic crisis, you will continue to show growth. I promise. Okay. I've said it for the last 3 weeks, and guess what? I'm going to say it for the next 4. If we continue to show the data, you will continue to do well. Now, again, the downside of this week, the thing that could bring you down is one, debt ceiling not getting completely resolved because it's not resolved yet, right? There's just all this like hope that it's getting resolved. 2, combined with the Fed statements and bringing us back down, really Powell and Bostic and Bullard are the ones you care about. Those are the 3. Those are the things to worry about this week, okay? Now, going really quick, showing you some of the fundamentals. VIX, again, VIX is sitting, I said, if it gets above 20, you're concerned. Under 20, don't really care. You look for upside in the market. You're trading at these lows. Same levels going back to 2021. When you were down in these lows, what happened? You pushed all-time highs. Nothing surprises me while we're down here. You have to keep looking bullish. DXY. Again, DXY continues to run up. I believe you're looking at this from the viewpoint of rate hike coming again, debt ceiling getting resolved. That's what you're doing here. Now, I will say, if I've gone over this, the Fitch ratings and the ratings on U.S. credit and U.S., I think, debt, if they downgrade U.S. debt, that could be terrible. If they downgrade U.S. credit, that will be possibly the worst thing ever. I just want to let you know. So that's like one piece of news I think you got to watch, and maybe I should put more emphasis on that and do a video on that. I don't know. But I'll probably post about it on Twitter, so look for it there. But that could be catastrophic. That's what really caused us to take a pretty big decline, I believe, back in 2010, 2011. So you can go check that out as well. I'll do like a write-up on it on Twitter. But again, DXY, interesting here. You're also seeing bonds continue to climb. The 2, the 5, the 10, they're all climbing, right? They're all doing well. But again, the US 10 over 30, you're still seeing the inversion continue to climb. I will say a lot of the love today on bonds came in shorter time frames, 2 and 5, which still is not beneficial for the economy. And definitely is not good news. We would like to see these yields slow down and come down, but they're not. They've had a vigorous and aggressive bounce. You're only at 90% inverted, but you're back up to 96%. Fully inverted, we typically expect retracements on the market. So again, those are things to be looking at as well. One more thing going into gold. And again, if you're looking for an aspect to understand maybe getting a risk off area of the market to where people are, still scared, gold's still dropping. I've said this again and again. Very clear triple top kind of forming out here, going all the way back to 2020, right? Triple top here. We just hit the top again, 2 weeks ago. You are getting rejected. If buyers are pushing us back in, we start seeing areas of possible default, areas with rate hikes and things along those lines pushing us back down. Gold should shoot back up. But until then, I am not a buyer, and this just confirms some of the upside in the short term as well with how we're moving here based on price action. Okay? Understand it, get it, push it through your head, right? These are things we have to understand here. Now, leaving you and just wrapping up really quick. Dow, Great bounce as well today. I do want to say this, and there's just a few things I have to cover here, right? We go into the 4 hour really quick. I want to bring up the daily, and I'm also going to bring up the 200 MA real quick. Dow, YM1, this is the Dow. As you can see here, this is the daily 200 SMA. Look at that bounce, right? You come right down to it, and you also bounce down here at your swing lows you had back here. A great bounce. Buyers showed up immediately, pushing you back up. Immediately. Exactly what you want to see. Very aggressive there, right? ES, obviously you're not even close. You just continue to bounce. You had the double bottom at near 41.12, pushing back up. Buyers showing up just in time as well. But this is what I was saying though. If ES starts to get buyers, if Dow starts to get buyers, what do we think is going to happen? Today's one of the first days that we saw aggressive buying. This was probably the most aggressive buying we've seen on the ES in a while, right? Even back here, it was short-lived, and we stagnate and push up, then stagnate, right? So here we go from 41.55, basically, 70 points in, today's time frame, right? But look what happens to Nasdaq. Nasdaq goes berserk. Crazy, crazy, crazy. Past, 48 hours, you're from 13.6, full rebound back to 14.4, almost 1,000 points. Almost a 3% day on Nasdaq. Everyone was screaming bearish, bearish, bearish when you push down less than 1%, but you push up 3% and I can't hear them anymore. So again, it's all about perspective, but it's also all about what's actually happening with the numbers in front of us. That's my viewpoint. If you have questions, comment down below. I'll see you Monday, maybe even Tuesday.